For decades, the US dollar has stood tall as the world's primary reserve currency. Its influence touches nearly every aspect of global trade, finance, and geopolitics. But why? The story begins post-World War II with the Bretton Woods Agreement. Nations fixed their currencies to the dollar, and the dollar was pegged to gold. This established its foundational role. In the early 1970s, the United States decoupled the dollar from gold. Many predicted its downfall. Yet surprisingly, the dollar's dominance only grew stronger, adapting to a new global economy. A major factor is its safe haven status. During times of global economic uncertainty or crisis, investors flock to the dollar, viewing it as the most secure asset. This demand bolsters its value. The sheer depth and liquidity of U.S. financial markets are unparalleled. Trillions of dollars are traded daily, making it easy to buy, sell, and convert large sums without impacting prices. A vast majority of international trade, especially commodities like oil, is priced and settled in US dollars. This creates constant global demand for the currency, underpinning its central role. Economist Emily gestures at a digital screen. Think of it. If you need to buy oil, you probably need dollars first. This inherent need creates a self-reinforcing cycle of demand globally. The political stability of the United States, including its strong democratic institutions and rule of law, reassures international investors. They trust that their dollar-denominated assets are secure. While often overlooked, the U.S. military's global presence and power contribute to the dollar's prestige. It underwrites a perception of geopolitical security and stability, indirectly supporting financial trust. The U.S. legal system, known for its transparency and enforcement, provides a reliable framework for contracts and investments. This predictability is vital for international commerce, and it draws foreign capital. Central banks worldwide hold vast reserves in US dollars. This makes it easier to conduct international transactions and manage their own exchange rates, solidifying the dollar's position. Economist Emily points to a whiteboard. Think of it as a shared language for money. Everyone learns English for business, and everyone uses the dollar for international finance. It's simply efficient. The more people and institutions use the dollar, the more valuable and useful it becomes, creating a powerful network effect. It's a self-perpetuating loop of utility. Underpinning all this is the sheer size and strength of the U.S. economy. It remains the largest in the world, with massive consumer markets and innovative industries, attracting global investment. A critical aspect is the petrodollar system. Since the 1970s, oil-exporting nations have largely agreed to sell their oil in dollars, leading to immense demand for the currency from energy importers. This dominance grants the U.S. significant advantages. It can borrow more cheaply internationally, finance larger deficits, and has immense influence over global financial markets through sanctions. Economist Emily holds up a dollar bill. It means the U.S. has incredible leverage. When the world needs dollars, they listen to what the U.S. has to say, whether on trade or policy. Despite its strength, the dollar's dominance isn't guaranteed forever. Rising economic powers, geopolitical shifts, and the emergence of digital currencies pose potential challenges. The euro was once seen as a strong contender to challenge the dollar. While it gained significant traction, especially in European trade, it hasn't unseated the dollar as the global leader. China is actively promoting its yuan for international use, especially with Belt and Road initiatives. However, capital controls and a less transparent financial system limit its global appeal. The advent of digital currencies, both private and central bank issued, could one day disrupt traditional currency dominance. However, their widespread adoption and impact remain uncertain. Economist Emily looks contemplatively into the distance. While challenges exist, the sheer inertia and deep-rooted infrastructure supporting the dollar make it incredibly difficult to displace in the short term. The dollar's role allows the U.S. to impose financial sanctions on countries or entities, restricting their access to the global financial system. This is a powerful, yet controversial, foreign policy tool. For developing nations, a strong dollar can make importing goods and servicing dollar-denominated debt more expensive, potentially hindering their economic growth and stability. Currency fluctuations matter deeply. For the U.S., printing dollars to finance spending can impact global inflation. As more dollars circulate, the value can decrease, affecting purchasing power worldwide and fueling price increases. The ability to pay for imports and foreign investments with a currency it can print, rather than having to earn foreign exchange, is dubbed the exorbitant privilege of the US dollar. Economist Emily smiles. It's a double-edged sword. While it offers immense power, it also means US economic policy decisions have global repercussions, impacting everyone. Despite various challenges, there is currently no single currency that possesses the institutional depth, liquidity, political stability, and global acceptance to fully replace the US dollar. The future might see a more multipolar currency world, where several major currencies share influence. But even in such a scenario, the dollar will likely remain a very prominent player. The US dollar's enduring dominance is a complex interplay of history, economic power, political stability, and sheer network effects. Its legacy continues to shape the global financial landscape. What do you think the future holds for the US dollar? Share your thoughts in the comments below, and don't forget to subscribe for more insights into global economics.